This episode is brought to you by Google Gemini. With the Gemini app, you can talk live and have a real-time conversation with an AI assistant. It's great for all kinds of things, like if you want to practice for an upcoming interview, ask for advice on things to do in a new city, or brainstorm creative ideas. And by the way, this script was actually read by Gemini. Download the Gemini app for iOS and Android today. Must be 18 plus to use Gemini Live.
When you're on the go and it's time to refresh your energy, grab an ice-cold Celsius Arctic Vibe, where 0 sugar, 7 essential vitamins, and proven ingredients meet the pure refreshment of frozen berry. Unlike traditional energy drinks, each sip of Celsius is a perfect balance of flavor and function. So whether you're hitting the gym, the office, or your next adventure, grab an Arctic Vibe at your local retailer or visit Celsius.com to learn more.
Hey guys, Akil here. Welcome back to the Trading Coach Podcast. Today, I want to share with you an interesting discussion we had on prop firm trading and a little bit of back and forth on whether it's better to use prop firm money to fund your account or whether it's better to use your own money. We're going to hit on both sides of it. So I think it'll be a very interesting discussion. Check it out. Back to the question. The question is pros and cons of trading with your own capital versus prop trading capital. And it says, like, it wouldn't make much sense for a prop firm to not have, wouldn't it make more sense to trade a prop firm's capital to not have to generate your own growing capital / extract the profits later on and build their own trading capital with it? I would say this to the question, and again, I'll kind of dumb down the question for you guys. Is it better to trade with your own capital or a prop firm capital? The trader's basically saying, wouldn't it be better to trade with prop firm capital? That way you don't have to build your own account. Do you guys have an opinion on that? Here's the thing. First of all, there's no wrong or right answer. All right? It's all personal preference. Some people aspire to trade for prop firms. Some people don't. Right? Some people would like to use prop firms. Some people would just trade their own money. So there's no wrong or right answer. It is a personal preference about what direction you choose to take your trading. Now, as far as the question is, would it be quicker to grow your account using prop firm capital or your own capital? That also depends on how much money you're working with. Right? If you're swinging a big stick from the jump, you may not need someone else's capital. If you are near broke and have nothing, then it's probably going to be a benefit to you. Now, before we get into kind of the both, because I do like that answer, you need to remember this. Another thing you need to consider is freedom, right? If you're going to trade for a prop firm, there are rules that you have to follow. You are trading someone else's money. There are rules that you have to follow. And within those rules, that means you may need to adjust your trading style. There will be certain things that you have to do. There will be certain things that you can't do. And understand that when you're trading someone else's money and you're specifically going through a prop firm, because it's their money, you have to follow their rules. So you have to be willing to adjust your trading style to fit whatever the regulations of that prop firm is. Now, do I think it's a great way to grow your capital? Yes, right? I'm a big fan of using other people's money, whether it's trading, whether it's real estate, whether it's any other type of business venture, using other people's money, right? Because you're going to have access to more money again, unless you're swinging a really big stick off the jump. You're going to have access, assuming you're doing well, of course, to more capital than you would otherwise. And you get a percentage cutoff for that. Now, Bobby said, I wouldn't want to rely on a prop firm forever either. And a couple people earlier said both. I think that's the best way as well. I know Cody does that, right? Do both. Trade your own capital. Trade your prop firm capital. If you plan on kind of going full time with trading, right? The hard part about being full time with trading is that you have bills to pay. So it's very, very hard to grow your account while you're taking money out of your account to pay for your bills, right? Because again, we're going to talk about position sizing strategies next, but the number one goal of trading is to keep money in your trading account so you can compound that and you can make exponential returns over time. If you're basically removing 100%, 75%, even 50% of your profit, because you have to pay for your lifestyle, that's just going to drastically slow down the process. So if you put yourself in a position where maybe you're you're trading for a prop firm, and you're also trading your own personal account, and you can do this many different ways, but maybe you never touch the money in your personal account. The money you make from your prop firm account is what you pay the bills with. That allows you to just grow that personal account quicker and quicker and quicker. Or if you have anything extra from the prop firm account, you throw that into your personal account, and you allow yourself to grow that quicker and quicker and quicker. So I think if you do choose to do a prop firm, I think that is the best way to go about it. But it's not one of those situations where one is wrong or one is not, right? The question was phrased in a way where it's like, well, why would anyone choose another way? Well, it's personal preference. Why would someone choose to be a technical trader versus a fundamental trader, right? Why would someone choose to be a trend trader versus a counter trend trader? Why would someone choose Forex versus the stock market? It's all personal preference and understanding what you want. Why would you be a swing trader versus a day trader, right? What's right to me may be wrong to someone else. What's right to someone else may be wrong to me. But those are some of the things you wanna consider. Real quick, going through some of the comments that I missed. Steve says your strategy may not fit the prop firm's rules. Yep, 100% correct. Stuart says both. Use the prop firm and fund your own. David says there's pros and cons to both sides. Bobby says think doing both. Scroll through some. Would you have freedom with a prop firm? To an extent, yeah. Freedom as far as doing whatever you want, no. There's the natural freedom, I guess, that comes with trading, but there is, yeah. I mean, if you don't produce, you're out. There's pressure. I mean, there's pressure in trading in general, but there's more pressure when you're trading with someone else's money, where if you don't produce, you're out. Trading for a prop firm is extremely difficult. Let's put it that way. So when people say I would like to start off trading for a prop firm, that's, in my opinion, it's not something you do until you're already a consistently profitable trader. And working with traders who have passed prop firm challenges here at Tier 1, and working with traders who I've seen repeatedly fail prop firm challenges, the biggest difference that I see is waiting, doing it when you're ready. If you're not ready, you will fail. Trust me. It takes a lot more time than people think, but it's the hot thing right now, so everyone's doing it. Prop firm, not likely to lose a large amount of own capital, have lots of skin in the game, and may trade more realistically. I would actually say the opposite. Well, yes and no to an extent. So you don't have to worry about losing your own money in a prop firm because you're trading someone else's money. So that is a benefit. There is the fact that maybe you will take it more seriously. You won't just kind of be a reckless gambler like you would with your own money, because we tend to be more careful with other people's stuff than our own stuff. So think about how you drive your car, then think about if like you were driving your friend's car to pick them up from somewhere. You'd probably be more careful driving your friend's car than your own car, because you're like, it's my car. If I wreck it, who cares? Your friend's car is a little bit more, you get in a little bit more trouble. Now, with that being said, there's a lot more pressure that comes with driving your friend's car. The same kind of laissez-faire attitude of driving your own car, which could allow you to be like a reckless gambler or a reckless car operator. There's a lot more pressure that comes with driving your friend's car. And pressure is something that leads to those psychological mistakes that we spoke about overcoming earlier. So you got to take that into account as well, and take this from someone who managed money. Managing money for someone else felt like 10 houses stacked on my shoulders, right? There was a dark shadow every time I placed a trade, because I knew someone was watching. I knew it wasn't my money. I knew I didn't want to lose it. And then with a prop firm, you know that you can be kicked out. If you don't produce, you're gone. So if you set yourself up where, hey, your livelihood is based off of you performing at this prop firm, and you go through a stinker stretch where you're not performing, and you may lose access to that money. And then what are you going to do? So there are pressures that come with both sides of it. Just going through trade prop firm capital and take the payout to fund your own personal account. I would not want to rely on a prop firm forever. Yep. This is the idea. Hard to accomplish without a plan. So I'm a little bit late running through these. Totally agree. Be good first. Yeah. George said, I've seen people trade more reckless when they trade prop firm. After when they've got funded or like during the challenge, George, what would you say? That probably should clear up when they get funded. Oh, really? Wow. Ego. Yeah, well, yeah. I guess that goes into that makes sense. Yeah. And George said he's seen people trade more reckless once they've gotten funded. Maybe it's one of those things where it's like, hey, they're doing everything they're supposed to do during the challenge, and then once they pass the challenge and they've gotten new freedom, ego takes over. They think they're better than they are, and they think that they're invincible. Yeah, that makes perfect sense. I've seen traders that they've become unsuccessful once they become successful because they do everything right. They follow the plan to achieve success. And then once they become consistently profitable, they're like, yeah, I'm better than the plan. I don't need to do this. I can just do what I want because I'm good. And then they stop following the things that brought them success in the first place. Again, going back to the weight loss reference, if you have this strict thing of like working out 5 days a week, eating the right meal, and that's what got you the results of losing weight. Well, now all of a sudden, right, once you've lost your weight, maybe you're like, hey, I don't need to go to the gym 5 times a week anymore. I've already done it. I'm good. And then you start going 3 times, and you start going 2 times. And then instead of 1 dessert a night, you start eating 2 desserts a night. And before you know it, you've put all that weight back on. So yeah, I didn't think about that, but that's 100% true. Greg says, I was in a free challenge a couple weeks ago and people were doing like 14% a day. Then the next day they were kicked out and the leaderboard was just a new person every half day. Yep. It's funny, Greg. I got asked a question the other day. It's from a trader that wants me to give him money. And I'm not giving him money. So he's like, he thinks he's trying to convince me on ways to give him money. So like, Akil, would you guys ever consider doing a challenge? And you know how I feel about challenges. I hate challenges. I hate them. In real life, I love challenge, right? You challenge me to anything at any time, any day, and I'm going to go, right? I'm not working out and staying in shape, right, for nothing. I'm staying in shape for that challenge. Like I live my life. It sounds weird, but I'm a competitor, former athlete. Like I am working out because I firmly believe if you are always ready, you never have to get ready. So I am just walking up the street waiting for someone to challenge me one day. Like, you want to race? Let's go. You want to lift some weights? Let's go. You want to fight? Let's go. Like I'm ready for a challenge. So I love me a challenge. But when it comes to trading, all challenges do is encourage reckless behavior. Because what is the goal of a challenge? Is it to trade smart and conservative and manage risk and be boring? Like, no, right? I told you the story about how I turned down a chance to be on TV because like I wasn't going to give them the stuff that sold on TV. They wanted like big splashing news reactions and big kind of big predictions and I was boring, right? But like no one likes that. The goal of the challenge is to make as much money as possible. So how do you make as much money as possible? You do reckless things. So challenges encourage traders to be reckless because one, there's nothing there's no risk, right? If you lose a challenge, it's not your real money. In most cases, people aren't trading with their real money. You're not losing anything. It's like, why not go for it all, right? It's the same as telling you, like, if you had a real account, George, and I'm saying, George, I'm gonna reimburse you for everything you lose in your real account. George would be doing ridiculous stuff on the chart, right? George would be doing some wild stuff. He'd be a wild boy on the charts, right? Because if he loses money, there's no risk. Like, who cares? It's like those the not all of them, but like you hear these stories about like the kids of these rich folks. I forgot that there was a Netflix series on it, I think, where like the kid's dad was like either the police chief or some rich politician, and like they were like murdering people, and like he was cool with it because like, my dad will cover it up, right? Like you do whatever, you can do some wild stuff when there's no risk. So that's what you see in these challenges. And what it does is it encourages the behaviors, and then these behaviors never last, and then you ultimately blow everything. And you see that in real life as well. But yeah, that's why you see these people making 14% a day on these leaderboards, and then they're gone and never there again. So that is, yeah, it is, yeah. We want to be boring and consistently profitable. That's the way to do it. Not big, not flashy. Yeah, it was the rich kid in the boat. Remember, like they killed their friend on a boat or something like that. Yeah, and then like yeah. Rich kids, I'll tell you. But yeah, those are the dangers. All right, we got to move on to the next subject. That's my opinion on that. Hope you guys enjoyed the podcast. As always, if you love the Trading Coach podcast, do me a favor, leave me a rating, leave me a review, and make sure you share this with your social network. Also, if you have a comment or an opinion on the conversation that we had, join the conversation. Right? If you're listening on Spotify, there's a little Q&A section below where you can share in your deal, and I can post it that way other traders can see it. Or if you're watching this on, say, YouTube, just leave a comment in the section below, and I'll read through it, and maybe it'll spark another discussion. All right, rate, review, comment, and I'll see you guys next episode.